Hello, folks. This is David Demars from Demars Financial Group with an educational economic update for July 2019. In this month's video, we'll discuss some recent headlines that influenced June's stock prices. I will also provide some perspective on what these developments may mean in the months ahead. Please stay tuned at the end of this video for a required disclosure statement. After a disappointing May, U.S. stock prices roared back in June. The S&P 500 picked up 6.9%, the Dow Jones Industrial Average rose 7.2%, and the Nasdaq Composite gained 7.4%. During the month, the S&P 500 reached a record high while the Dow Industrials and the Nasdaq Composites came within a whisper of their historical peaks. So, what fueled the rally? Two factors: optimism over a potential interest rate cut by the Federal Reserve and a growing belief that the U.S. and China are actively working to solve their tariff dispute. Stock prices opened the month lower, but soon climbed on hopes that the Fed would cut short-term rates. News that the U.S. would not impose further tariffs on Mexican imports also helped the rally. Stocks lost a bit of momentum due to escalating tensions in the Middle East, only to rise again on the news of President Trump's positive phone call with Chinese President Xi Jinping. Wall Street, however, finished the month mixed as all eyes turned to the G20 summit. While markets applauded the progress on trade, attention in June shifted to the Federal Reserve and what's next for the short-term interest rates. The Fed kept the federal funds rate unchanged at its June two-day meeting, followed by a quote-unquote dovish statement indicating it would take appropriate actions to sustain economic growth. Since markets have already assumed a future rate cut is inevitable, the potential for volatility may increase if the Fed continues to hold steady on rates. That's why this month we'll be watching the Fed closely for any signals it may send investors. Remember, the market's recent rise has been partially driven by the anticipation of a future rate cut. If the Fed were to suggest that a rate adjustment is not in the immediate future, the market may find itself repricing stocks to reflect changing expectations. So that's it for this month's educational economic update. Once again, this is David Demars from Demars Financial Group, signing off for the month of June 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 509-536-9556. We'd be happy to talk to you. And here's a required disclosure statement. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or as a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thank you again for watching.